Rob Gill and I do not always see eye to eye. He leverages some policies. I leverage different types of policies, but he knows how to shoot straight and he knows this stuff like no one else's business. So today we're gonna duke it out and actually help you understand what are the policies out there. Did you get the right one? Will it give you the benefits that you want? And if not, I can promise you this, at the end of the video, I'm gonna share with you my favorite ninja strategy on how I milk insurance to freaking crush it in real estate.
'Cause we're gonna be legends. What we're doing here ain't just scary. It's about to be legendary.
Rob Gill here in the house. What's up, buddy? How you doing?
What's up?
Dude, I love this man. I lives on the East Coast. I'm out here on the other coast, and we come together when I put on events, do stuff like that. And it's always refreshing to have a conversation and catch up. Rob's become a good friend over the years. But what we're doing here today is we're talking, Rob, about whether people actually have the right policy. Because there's so many people out there like, hey, I've got like a term insurance policy. I pay the least amount of money. And then if I die, then there's a benefit. I'm like, you know what? Everyone should do it. That's smart. But it's not the smartest thing that you can do. What's the smartest thing people can do in insurance, Rob?
First of all, they got to educate themselves on their policy. They need to know exactly what kind of policy they have. Because to your point, when someone buys a term policy, they typically buy it because they were told it's inexpensive and it's cheap, and that's how it's marketed, by the way. Now, that's a big ticket item for the insurance company, as we know, because 99% of the time, and just check the facts, but 99% of the time, people outlive the term and there's no death benefit.
Yep.
The power, and if they're going to keep the policy, they got to pay a whole bunch of money far beyond the initial cost of the term policy.
Now, by the way, it's still smart, right? Like I remember when I was a young man, before I really had any money, I got like a
Absolutely.
got like a $500,000 or $1 million policy.
Yeah,
and it was like $22 a month or something super cheap.
It is smart.
Because I was young, and I'm sure the insurance was looking at me like, dude, the likelihood of you dying in the next 20 years is really low, and so we're not going to charge you a lot, but frankly, we're going to pocket all that money because you're probably not going to die.
Yes.
And you know what? I got some peace of mind knowing that if something happened, dude, my wife was going to have something to help her figure out how to transition, right?
Absolutely.
But I've gone on since to actually learn that there's a wiser approach to insurance where term is really short-sighted. And here's the problem: when it's time for you to renew in 20 years, they're not going to charge you $22 for $1 million. They're going to freaking charge you an arm and a leg because guess what? You're older. There's a higher likelihood you're going to die now, and you're like, man, I wish I had locked in something more intelligent earlier when I was young.
Yes.
And it's too late to do that. So today, I think we should educate them on a couple of things, which is, do they know about whole life, and do they know about IULs? Even though I hate them, I think that they're viable and people should know about them. Tell us about them.
Well, real quick, when it comes to the term, remember, if somebody buys $1 million term for 20 years when they're 25, by the time they get to 45, that million after inflation is really worth about $700,000.
Oh.
Right? So
Good
the
point.
cost of living is not keeping up, which is why whole life is so good. Yeah.
Yeah, so tell me about whole life. How's it different?
So whole life, as you know, we've talked about in the past, and just to kind of reiterate it, as you begin to fund the policy, it grows in a cash value, and every year you have different choices of what you want to do with your dividend, but if you use it internally to buy more insurance, it increases your death benefit. Thus, it stays with the cost of living.
By the way, I would never do that. I understand what you're saying about cost of living. I would never do that.
Yep.
I want my dividend.
Yes.
I want my benefit.
Yes.
And then I want to use it to actually get the living benefit, which is I want to put it into real estate.
Absolutely.
I want to put it into investments. That's just me perfect.
Well, you have the option is the point. You don't have any options with term.
Yeah. Versus, right, so understand that in that deal, you're not just writing a 22 cheap little $80 whatever check for your term insurance. You're writing a much bigger check, almost using your insurance a little bit like an investment, like a bank account, that has a lot of other benefits that you get from putting your money in there.
Yeah, but I want to share one thing. When it comes to insurance and being an entrepreneur, I love using life insurance for alternative investments, including real estate. I love it. I think it's phenomenal if you have a disciplined approach and you're with a disciplined team that understands the 324 markets, that understands exactly how to buy things. I love it. If you do anything for the long term, it's a home run. But remember, all you good folks that are buying insurance out there, this is important. You have a family, and if you don't, you're going to have a family at some point. So there has to be a factor. And the rule of thumb is 20, 30 times household income as a death benefit. So if somebody's making $200,000 a year,
They need $4 million.
they need $4 million. They maybe even need $6 million, right? And there's a lot of agents out there that, and they're not going to like me for this, and sorry, but this is just the way it is.
Throw them under the bus.
You know, there's
I
agents that
like throwing
undersell.
them
They for all the clients out there that are married,
Dude, this just happened to a friend of mine. I can't believe, I'm like, he goes sitting on a whole pile of money in the bank, and they only insured him for like this. I'm like, what were you thinking, knucklehead? Are you
Because
kidding me?
if their house, if they have insurance, if their house burns down, they want full replacement value.
Right.
Then you need full replacement value on human income.
Yeah. Well, and full replacement value would have been way more than 10 times what that insurance was for. It was just like, it was good that you had something in place, but man, you undersold yourself on that. That was a mistake. Every one of us needs life insurance. You don't got a lot of money, go term.
Yeah.
But if you are like, hey, I've got a little bit of extra money because I'm PYFing, I'm paying myself first, you want to take that extra money and I roll it into an insurance policy, guess what? I could pull it right back out. Guess what I can do with that money? I can invest it, get the benefit from investing my alternative investments while I'm still getting the benefit from the insurance.
What I will say though about the IUL,
No.
what I will say about the IUL, we have to fact check this, but what I will say about the IUL
Sounds like
is
you're not so
time
confident.
I am confident.
Nah.
As time goes on, you don't have to put the same amount of money in.
Wait, what do you mean?
But
It goes
still,
down?
you could still reduce what you put out there and you still maintain the same.
So you
same
design the
death benefit.
policy where,
Death benefit stays the same, but your out-of-pocket goes down.
can you do that with whole life?
Strategically, yes, but not as easily as you can with an IUL.
Really?
Yes.
Gets me to think a little bit. In general, I don't like the IUL because it's tied to the stock market. I'm just triggered. Everything stock market is just stupid. Eddie, our fact checker, is not see like, Kris, you're saying it wrong. Dude, what does he mean? What does he mean? What does it mean? What are you talking about? Why are you not? Are you just pissed at what I'm saying or what?
Because it's technically not.
It's tied to the stock market, isn't it?
But you still get guarantees.
Interest.
You get interest credited to your policy, blah, 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 blah. Semantics, potato. I mean, bottom line is there's a correlation to the stock market, right? Stock market goes up, my dividend goes up. Stock market goes down, I feel hosed.
There's no dividend in IUL, but your rate of return.
Fine, okay. Potato. Holy cow.
No, but all seriousness.
I'm
so-
not the insurance guy. I just abuse this stuff to make money in real estate.
But he is a great student, and he understands how to utilize life insurance to buy real estate at levels that I've never seen before. And that's the 100% truth. I've never seen what you do, and you're amazing at it, honestly.
Thank you.
But the education on the product is so important. It's important to understand. Yeah, you just starting your marriage, and there's not a lot of money. Buy term insurance that you're later going to convert to whole life, and I love whole life first, last, and always, and then building off of that as well.
So here's when you're asking yourself, did you get the right policy? Number one, I think you need to ask yourself, first of all, do you have a policy and are you properly insured?
And things are always changing.
If you're underinsured, that's a problem, and you need to fix that tomorrow.
Yep.
Because if anything, God forbid, were to happen to you, you'd want to know that you and your family, or that your family at least, is taken care of. So number one, am I underinsured? Number two, am I wasting my time with insurance by putting it into cheap term when actually I have some discretionary income every month and I could actually be double dipping by putting it into my real estate or alternative investments while getting the benefit of insurance? Think about it this way. Ask yourself this simple question. Are you saving money every month? If the answer is yes, guess where you're putting the money? In a bank. Don't do that. Put an insurance policy. The benefits are a lot bigger. They're more dramatic, and I can still use the money to invest. Like, why would you ever use a normal bank when you can use an insurance policy, pick up all those extra benefits, and invest? This is where you need to get educated. And at this point, if you're a little confused, like, geez, you and Rob are like freaking going the rounds. I'm confused, like, where do I even go? There's a link below.
Yep.
Get with a member of the team and actually evaluate your policy. Have them actually stand and just audit it and take a look at it and say, hey, you're underinsured, you're overinsured, or this doesn't make sense, it doesn't make sense. And by the way, based on where you're at, here's some things you should be considering that you haven't yet. Maybe because like me at one point, you were just uneducated and didn't know. That's why I'm making this video today, to say what Rob just said. Get yourself educated, learn your options. You can't do it on your own just from this video. Click the link, talk with the team, and they'll at least help evaluate and let you know what that looks like.
Human life value, full replacement value.
Okay, guys, Rob, thank you for being here today. Appreciate you. Appreciate some of the things that you said today. Pissed me off on some of the others. And for the rest of you, thank you for being here today. Make sure you subscribe. We look forward to catching you on tomorrow's video if you're a subscriber. If you're not, fix that right now. And, dude, will you do me a favor? Will you please smash the like button? Every time you do, it tells YouTube, hey, Kris' material is worthy and we should share it with more people. At this point in my life, with the wealth I've built, I just want to help more people build wealth. And you know what? You can help me doing that by doing something as simple as a clickety-click on that thumbs up. Thank you guys so much. See you on tomorrow's video.